Good morning, everyone. A very warm welcome to all of you who are joining our panel this morning. My name is Syed. I'm Canada head for a global fintech called Intellect iGTB that offers contextual payments, digital, liquidity management, escrow, and VAN virtual accounts solutions on the cloud. Our topic for our discussion this morning is payments as a managed service. A quick note on the frame of our discussion. When we think about payments as a managed service, we often think about payments processing, we often think about payments execution. Some of the use cases that we'll be touching upon today also include payments from a digital origination standpoint, as well as data and related service once a payment has been executed. We've assembled a wonderful panel today, and so I would ask the panelists to kindly introduce themselves, starting with Tracy.
Good morning, everyone. Happy Friday. Tracy Lagasse, I'm with Microsoft Canada, and I'm the industry executive that covers the financial services industry. So banks, credit unions, capital markets, pension funds, coast to coast. And really, my role is helping our customers understand what are the global trends and opportunities and disruptions, and then link those back to whether it be Microsoft first-party solutions or awesome partner solutions like Intellect here today. So happy to be here.
Thanks so much, Tracy. Anthony?
Sure. Good morning, everyone. Anthony Danda. I head up the product management team at CWB. I've worked in the payments product management space for more years than I'd like to admit in Canadian, North American, and global roles. For a bit of context, CWB recently initiated a payments transformation program, which includes the deployment of a payment services hub. So it's been a really exciting journey so far, and I'm glad to be here to talk about the experience.
Thanks so much, Anthony. Dave?
Good morning, everybody. David Revell. I'm a strategic advisor and director with iGTB. I'm a director of a number of other Canadian fintechs and recently retired as a global CIO of CIBC.
Thanks so much, Dave. And thank you for joining us again as part of our panel this morning. So as we kind of kick this off, the first question I'd like to ask each of you is, managed services and outsourcing have always been around in financial services. But what have been some of the challenges for this model specifically in payments? And why do you think the time is right now for payments as a managed service? And if I could maybe have Anthony start, please.
Yeah, sure, Syed. And I'm a history major from university, so I'm going to take us through a bit of history around how we got to this point. So payments as a managed service, I would say it's become a much more feasible solution just in the past few years. So in the past, and I've worked for financial institutions for the past 20 years, but it's normally been a very expensive, complex proposition, and the infrastructures weren't mature enough to extract a significant amount of value for clients or the bank, right? So it was a significant barrier for a number of financial institutions. And payment technology just in general used to be built and managed primarily in-house. But I think a lot of that changed, or at least I saw some of the change come beginning in 2008 with the financial crisis, where it brought about different regulation and began to reshape the payments landscape. So we've seen an emergence of fintechs, non-traditional payment providers, combined with increasing payment volumes and changing consumer behaviors and commercial enterprise behavior. So it's been very disruptive to traditional models of delivering payments and cash management services. So more competition, more regulation, most recently have also put additional strain on banks' revenues. So we've had to rethink our approach to payments architecture so we can quickly meet changing customer demands, because what we're seeing is that the banks are no longer leading the charge, but the commercial enterprises and the consumers are really driving the demand, right? And so it's the responsibility of financial institutions, Payments Canada, et cetera, regulators to follow that demand. And then we need to address the new regulatory requirements as well. And we have to do all of that while also growing market share and revenues, right? So it's a pretty big ask. It's a significant paradigm shift in a space that's traditionally a very slow burn, particularly in Canada, right? Because of the nature of our financial institution industry. But to address these challenges, banks have been looking for something of a holy grail. So a very high performance payment processing solution that's scalable, compliant, transparent, and all at a lower cost, right? So, it sounds like an absolute miracle, but I think, we're seeing a shift, right? And another challenge that I think we've had that's worth mentioning is funding too, right? So the focus has been on non-discretionary, or the focus now is non-discretionary compliance and maintenance of that in-house infrastructure. And again, it just compounds the issue, right? So options have changed too. Rather than just having a standard all or nothing solution, which is what we used to experience, let's say 10 years ago, delivered in a box with limited options to tailor a solution to your particular target market. We're now looking at payments as a managed service, which offers packaged microservices that can be delivered through APIs via the cloud, which reduce the cost. So I think we're moving in the right direction, and we're starting to see some fundamental changes in the options in the market. And then lastly, I would say that the value proposition around payment products and services in particular have changed as well. So in the product space, payments have become much more commoditized. I think everybody has seen that over the past 5-10 years. So we're moving away from siloed payment products to a utility value chain, and we need to bring the architecture along with that. And I think that's where payments as a managed service plays a very big part.
Those are great insights. Thanks, Anthony. Dave, what are your thoughts in terms of why payments as a managed service now?
Well, I think that Anthony did an incredibly comprehensive answer there. So I'll build on a few of the points. And while I'm not a history major, I have had 35 years in the business, so I guess I'm a bit of a living history major for this. I think from my perspective, just to summarize, the reason why now is that the technology is now available, it's cost effective, it's easier to use than it was before, is number one. But the strategic drivers over why companies could look at this, they're all kind of piling on each other. There's lots of regulatory change. There's lots of change that businesses need to do that are being driven on them that don't actually go contribute to growing revenue. The cost of managing that change is expensive, particularly larger organizations with legacy systems that are out there. It could be quite expensive to do. And from a revenue perspective, as Anthony mentioned, there's pressure on that as well. So it's really, you've got all three of these things coming together to put pressure on looking for alternative solutions that are more cost effective. And the underlying technology and how the technology is managed, in particular, as we've moved to cloud platforms, and that has just gotten better and more cost effective to do it. So I think that's probably the main reasons.
Thanks, Dave. Tracy, your thoughts?
Great. Well, I'm following these two. So I'm going to focus in on maybe two areas that I didn't hear you guys say and cut some of my comments out. But I think there's a couple of things. If we consider why, you said why now for payments as a managed service, why not before? Two of the big buckets that we consistently heard from our customers were related to risk and availability of viable options to even look at in this space. And so then you have to combine that along with the market dynamics. And this is a Canadian conference, but when we look at this from a global perspective, I love the fact Canada has impeccable timing in terms of everything sort of coming together at once. We had real-time payments projects already prioritized across many of our financial institutions. We had cloud and modernization projects already earmarked and maybe on a 2 to 4 year journey. But then along came COVID. And really, COVID did serve as just this huge accelerator for all of these digital transformation. And it really matured a lot of our customers' IT organizations, cloud journeys, understanding of the technology, and was a catalyst to actually drive that. We saw projects that were slated for 2 to 4 years in terms of implementation be shortened to 2 months. And really what that taught us, if I focus on the risk side of it, was you actually can do something that's a multi-year journey in a much shorter time frame and still manage the risk associated with it. So that was a key takeaway. And when you think about risk, like the regulatory side, Anthony, you mentioned it. We've been working with regulators for 6 years, probably about 120 regulators globally. But last year, we had 70 regulators actively participate in a summit with us to understand what technology risks exist. OSFI has a consultation out on that. Regulators are actively looking to figure out how do we actually remove some of the barriers associated with that to allow the market to actually innovate and move forward. And then viable options. We're sitting here with Intellect today. There weren't very many of those key partners that had these managed service offerings available for customers to even choose from before. Anthony, you've mentioned a couple others, even in other conversations we've had, but customers now have options to look at, proven use cases. They understand how to use it. So the partners have matured along with the market and the technology. And then I would just reiterate, I think what you said, I am in complete alignment that all of these things came together at once. But customers are changing, competition is changing, technology advancements are lowering the barrier to entry. And for people that are not looking at whether it's a cloud managed service or a managed service for payments, it's probably going to hurt long-term viability of their business if you're not contemplating these new technologies or business models moving forward.
So Tracy, you touched on an important point just around the risk piece. Maybe we could dig a bit deeper into that element. What are some of the risks or challenges in your mind with payments as a service, and in your mind, do the benefits outweigh the risks?
If I were to be a bold Microsoft technologist, I would say, of course, the benefits outweigh the risks. But some people sitting there might think that I'm operating in a complete vacuum. So here's what I'll say is that the risks that are associated, and I divide it into two. There's cloud, and then there's managed services. The benefits, of cloud versus the risk of cloud, I think are becoming much closer. People are understanding how to implement, how to manage, and it's not just about the technology, it's the processes and the operational sort of aspects that you need to pile on top of it to actually manage that risk. When you have managed services also offered on cloud, that reduces the risk quite a bit more as well. But risk is a very individual thing. Every company has its own tolerance, its own definition. It doesn't help that our regulators really are a little bit gray. There's no neat little checklist that everyone can go through to feel like they're really secure. But what I would say this in terms of benefits of managed services and modernization versus the risks of moving, at some point, the risks of not doing it and the impact to your business of not doing it in terms of innovation, product innovation, customer experience, competitiveness, cost management, moving away from a whole bunch of time spent on technical debt and legacy systems. The risks of being in that bucket of the market are going to be far greater than being in the risks of managing the unknown.
So Dave, what are your thoughts just from a risk standpoint, and whether the risks potentially outweigh the benefits?
Yeah, well, I think what we have to remember, Syed, is that there is no risk-free solution. When we talk about the risk associated with this, if the alternative of modifying, making changes to existing legacy systems, or if you don't have those systems in place, implementing something new, those are not risk-free alternatives. So in the balance of all the choices you have, there's risk associated with every one of them. It depends a lot on the nature of the organization. If I was looking at it from a smaller bank perspective, the option of being able to get a turnkey solution that's already tested and tried and proven has a lot of characteristics that I would consider a lower risk solution than building from scratch. If it's a large institution, again, depending on the state of your systems, the state of your legacy systems, the amount of change that would have to happen to that, the brittleness of some of the old systems, and the amount of technology debt, that's going to influence your risk as well. And the option of being able to some degree, selectively modernize some of your systems and move directly to a modern managed service actually lets you leapfrog some of the technical issues you might have had in the past. So there's no easy answer. There's no solution which is entirely risk-free. And the net of it is it's going to depend a lot on the specific organization.
Yeah, thanks, Dave. So, Anthony, in your introductory remarks, you sort of mentioned that CWB was going down this journey of payments transformation. Would you be able to share sort of any early lessons learned or any advice that you might have for folks in this audience around embarking on this type of journey?
Yeah, sure, Syed. So speaking as a product manager, my first piece of advice is to ensure that the payment architecture can evolve to continually meet the needs of the clients you're looking to attract, right? So I think one of the pitfalls that just the Canadian payments industry has fallen into, and that they're trying to bring themselves out of, is they've built their architecture so that it's not extensible, it's not easy to really introduce new services, and that's really where the contention is coming between the consumer demand and how quickly and inexpensively or cost effectively the Canadian financial institutions can meet that demand. Now, CWB is in a slightly enviable position because we have very little legacy technology, and we're beginning this journey of a more sophisticated payments architecture. So we've been able to take a step back and really look at what's the demand, who's the target market, and what are our options for delivering against that vision and strategy. So at CWB, we have a particular focus on business owners. So we assess potential vendors with a lens to help CWB constantly deliver a user experience that helps our business clients focus on running a successful business, right? So I'd say that, we've heard from our clients, right? Particularly small businesses, medium-sized enterprises, and it's been a common theme throughout that I've heard at the summit is, running a business is messy, right? So what can you do to help me run that business, right? So we've put that lens on everything that we do, is ensuring that we are putting in place a solution that's fit for purpose. Some of the other key learnings that we've had just in a very short period of time is we wanted a system that was in production in Canada today. So we encountered a lot of vaporware with some of the vendors that we were talking to who were just building out their Canadian payment capabilities, right? So to Tracy's point, we're seeing a lot of people enter this space, right? So I think, a lot of the big players are recognizing, particularly the global players are recognizing that there is a growing market for this and that Canada is certainly a space that they want to play in, but they've built out their services around SEPA and around other geographies. They're just entering North America where they focus primarily on the US, and they're coming to Canada and they're recognizing, listen, they automatically assume that EFT is exactly like ACH, right? And it's a horrible mistake, right? And then they get into it and they recognize that even things as innocuous as a bill payment can be very different, or e-transfers can be very different in Canada than in the United States, right? So we decided to go with a partner who had a presence in Canada already, had already done a deployment and understood the payments landscape in Canada where we weren't necessarily training them. We also gave significant weighting to a vendor's implementation track record in our assessment of the different solutions. So this was an area where I really focused, particularly on the reference calls, right? Is how did the implementation go, right? It's critical to ensure that you're partnering with somebody who is going to go along the journey with you. You're not going to be drowned in a number of change requests, right? That they're really trying to level set and understand the direction that you're taking and what your objectives are in taking this system, and then working with you along that implementation to make it as seamless as possible, right? So that was very important to us to understand that our vendors or any partners that we have had a very strong record of ease of implementation. I'd say it really lays the foundation for immediate and future success. And as we know, the margin for error in payments is very low, right? The last thing you want is anything hitting the press, right? You don't want to hear that you couldn't make a payment, for payroll or, for, a particular demographic. So that level of risk really made us focus on identifying the right long-term partner and not skimping on certain aspects that, one may have a tendency to do. So that's my advice.
Thanks, Anthony. That's great advice. For those of us who have been watching some of the sessions this week on the cloud, there's been quite a lot of debate throughout the week just around sort of private cloud versus public cloud versus hybrid cloud. I was interested in knowing sort of your thoughts on, is there a right model? And maybe Tracy, we could start with you on that.
Yeah, this is a conversation that we have frequently, obviously, with our customers as they're trying to figure out what their strategies are. And so we look at the data and we look at where people are investing, and really this becomes less of a technology question in our minds than it becomes a leadership and strategy question. And so we really recommend that customers look at what is your 5-year strategy, with a recognition that where you want to go is not necessarily where you are today. And so I think that necessitates a solution like hybrid to be able to help our customers bridge that gap so they can get to fulfilling the strategy that they have in place. But we would say the cautionary tale in terms of evaluating and getting engaged in this conversation is, don't use hybrid as a way to defer tough conversations that you want to have about where your business wants to go. So rather than be evaluating the technical solution of hybrid versus public and the risks, it really needs to start with, where do you need to be in 5 years? And what's my roadmap to get there, as opposed to evaluating them sort of apples to apples in terms of what they offer in terms of deployment strategies.
That's great, Tracy. Dave, your thoughts?
Yeah, I think that for most large organizations, I think that you're de facto going to be going down a hybrid cloud strategy. If I looked at my own personal experience, I would have had a bias as the public clouds evolved, and have been looking at this for many, many years. As the public clouds have evolved, as the scale, the cost, the security got better than actually what we were able to do internally in most cases, I had a bias towards public clouds. But you also have apps that are very difficult to move over to that. So I think the reality is large organizations are going to have some things that, to your point, Tracy, strategically, you're going to be able to move them forward. You can move them onto a public cloud platform, and it makes a lot of sense. And there's going to be other ones that, from a timing perspective, it's going to be longer, it's going to be harder. Some of the legacy apps that are not going to lend itself to public cloud as easily. So I think for many organizations, you may have a strategy that biases you in one direction over the other, but for practical purposes, you're going to wind up being in a hybrid cloud strategy.
Thanks, Dave. So maybe we can turn sort of next to sort of the opportunities in the marketplace around differentiation, around monetization of payments. Again, a very important theme that we heard about throughout the week. And so as banks kind of look at these managed services options, they look at potential partnerships with fintechs that offer a number of capabilities on the cloud as managed services. What are your thoughts in terms of where some of the opportunities might lie from a differentiation and monetization standpoint in partnership with fintechs or otherwise? And if you could maybe give an example or two of use cases, that would be, I think, very beneficial for the audience. So maybe, Anthony, we could start with you on that.
Yeah, it's a good question, Syed. So when we began our payments transformation journey, we sat with a number of our clients to understand what they liked and disliked about how they interact with payments on a daily basis. And this was across a broad set of small business owners, sole proprietors, up through kind of mid-market. So we knew from the beginning that we weren't going to win. To my further comment about commoditization, we weren't going to win on EFT, wires, bill payment, in a secure environment, right? So a seamless user experience, decisioning AI, access to data were common requests that we heard, right? So as I mentioned before, there was how do I make my life easier when I'm doing payments, right? So ease of use and that seamless. They don't want to log on to 3 different applications. They want everything to be in one place. They want it to be intuitive. They want it to be frictionless. So, and I would say another comment that we heard quite often is that using fintechs can be very disjointed as well, right? So, you don't want to go to 6 different people to do all of your payments, right? You really want to have everything holistically within one digital channel, right? So the question was for CWB, how can we remove payment friction so that they can focus on running a successful business? So payments as a managed service, coupled with the right channel experience on the front end and easy connectivity to partners on the back end, brings all those elements together to provide that data-rich, intelligent payment ecosystem in a more seamless way, right? So payments as a service and the payment services hub that we're deploying right now really is at the center of a much larger strategy, right? So we're doing, in some background, CWB is also launching a brand new digital platform. So we're hoping that it's completely fit for purpose for the clients that we're looking to attract. It's very seamless, and it integrates, and the idea is to integrate payments directly with the payment services hub so that all payments are managed through the digital platform and are processed and routed through the payment services hub, so that we're connecting, so that any of the friction that's on the back end with our providers is removed for our clients on the front end. There's also been a lot of sessions at the summit around ISO 20022 and modernization or monetization of data. So I think that's because, in previous years, everybody was talking about real time, everybody was talking about instant. Now it's all about ISO 20022 and the monetization of what am I going to do with that data, right? How is it going to help me as a bank, and how am I going to be able to help my clients, right? So, so I think there's, it's going to be interesting to see how it plays out. Being able to leverage payments as a managed service to accelerate time to market with this functionality, right? And so I've worked for a very large financial institution, global financial institution, and now I'm working for a relatively small domestic institution. And what I'd like to see is for CWB to be able to get to market as quickly as those DSIVs by taking advantage of something as payments as a managed service or a payment services hub, so that we can collect that data and provide the same level of service that the large financial institutions are providing to their clients. We should be able to offer that at the exact same time, right? And it should be the use cases that align to the clients that we're looking to attract.
So, sorry, before I go to Dave to sort of ask his thoughts on this, Anthony, you sort of talked about the strategy and you talked about the different pieces from a digital, the payments piece from a payments hub, and then data. Now, how do you bring these different pieces together, right? As an executive team, as a leadership team, there's obviously different product leaders, there's technology, there's operations. How do you make all of this come together for sort of an effective strategy around driving business outcomes for your clients?
That is a great question, Syed, and I can't wait to hear how Dave responds, because I'm hoping that I can bring what maybe has worked for Dave's organization back to our organization. And not to be flippant or say that it's specific to CWB, but we do struggle internally, right? Because the data conversation is massive, right? And it's not just the monetization or how can we effectively use data as an institution to deliver on client demands, but also internally to provide tailored solutions to our clients, right? I think even within our organization, there are some silos, right? So we're looking at it from a digital perspective now that we're doing the digital platform. We're now looking at payments, right? AML is a huge component of data as well, right? So we're trying to reduce those silos through communication, ensure that everybody knows at a very senior level what everybody else is working on, so that we can build out a holistic data strategy. But I think the concept is so new, and I know that no other financial institutions, and even the larger financial institutions and some of my colleagues, have been able to crack this nut yet. So I think it's a work in progress.
Thanks, Anthony. Appreciate that insight. So, Dave, if we could go to that first part of the question, just around use cases or examples around how there might be opportunities to differentiate and monetize.
Yeah, I think it's a really big question, Syed, and Anthony raised a bunch of important thoughts on this. Like, clearly, things have shifted a bit. ISO 20022, people looking at the data, and certainly there's lots of options of things you can start doing when you get that data. From a business perspective, you start thinking about greater ability of offering things like working capital solutions, cash flow forecasting, payables and receivables. There's a gamut of things that data is going to allow you to do. But I'd also like to step back for a minute and take it from kind of a technical, from a CIO perspective, is getting value out of these things. One of the things that's really important is the agility and speed to market that you get. You can have the greatest idea of all, but if you're very slow, if you're hindered in how to get to market. So for me, one of the key enablers is you're never going to know exactly how things are going to change, but investing in a platform that has a great degree of flexibility, and in particular, a modern architecture, open APIs, connectivity, et cetera, so that as things change and evolve, you want to be nimble, you want to be agile, and you don't want to be locked in with old architecture and systems that actually make it difficult to pivot. When a new fintech comes out with a new offering, or a bank introduces something and you have to react to it to react to the market, you want to be able to do that quickly. So I think that the combination of kind of a modern architecture, open API structure, gives you that flexibility to do, not just internally, but also with your partners. So kind of a long answer to your question.
And Dave, just on that point that I asked Anthony as well, clearly these types of changes involve many different groups and many different stakeholders, typically within a bank. How do you drive that change to make sure that everyone is sort of aligned, and in the end you sort of get to that end state that you're looking to get to?
Yeah, well, again, there is no perfect answer for it. Again, as Anthony mentioned, solutions that bring together many different partners, like, the complexity doesn't go up linearly, it goes up exponentially on that. So I've always been of the opinion that said you try to pick key partners. You try to pick key partners and solutions that it may not offer everything, but it's got the majority of things, and picking great partners with a bias to execution and who have proven and who have done it before is really important. So if we look at this panel here, like Tracy, obviously, I had made choices in the past around Microsoft as a platform and as a partner, like a global partner who has a strong track record of delivery. I look at my experience as prior to this as a customer with iGTB, and picking a company that actually had a strong track record of execution. I think that's incredibly important, because you don't want to have 50 different people accountable for everything. You want to pick a small number of key partners, consolidate more business around them, and I think that's a better probability of success. Fewer partners, key partners, more strategic.
Thanks, Dave. Super. So, Tracy, your thoughts in terms of opportunities for differentiation and monetization as you kind of look at your banking clients across the space.
Yeah, and just before I jump into that, just sort of a comment on your part 2 question. One of the things that we get engaged in quite often now in the market is Microsoft ourselves sort of had to go through our own digital transformation. Just because we are a cloud company and we have all the technology, we had quite a journey ourselves in terms of bringing together, whether it's finance, sales, operations, retail. And so, one of the things that we now sort of work with many of our customers are those sort of peer-to-peer conversations. So business unit to business unit, in terms of, what does technology actually mean to you? What does data mean to you? How do you interact with this? And it is as much a change management, cultural, operational shift as it is technology. But now let me get to your actual question about differentiation and monetization. The topic is for anyone that has followed what Microsoft's recently done, you're going to know that this topic, we're just aligned with this. Our biggest innovation launch this year was the launch of a cloud specific for various industries, financial services being one of them. And the whole premise of the launch of this cloud specific for an industry, and financial services in this case, is that ability to enable those fintech partnerships through API connectivities, and not just fintech partnerships or partnerships to enable sort of an end-to-end process and seamless, but connecting workflow, connecting the employee experience, delivering on a customer. But the foundation of all of it has to start with giving our customers, the financial institutions, the banks, no matter who you are, that common platform for your data, and having it in a secure, compliant way so that you can just manage those integrations seamlessly without having to, I don't want to say without having to worry, it makes it sound more simple than it is, but you need to have that platform for your data and your connectivity to be able to plug all of those things in seamlessly. And, you know, it's not just about that process capability, like you guys have touched on data. We are beginning to see already some incredible things related to data. And so we haven't really touched on also the impact of open banking coming, that's going to drive even greater need for us to have that flexibility to do all of these connectivities. But ecosystems in general, I think it's the World Economic Forum that's projected that this ecosystem connectivity is going to be a $60 trillion global industry by 2025. And that's not just about connecting capabilities, it's about connecting data. About a month or so ago, there was a press release of some really interesting work that was done in terms of combining retailer data with bank payment data to create these hyper-personalized customer experiences and next best actions and offers. So that's a real life example of how these pieces now need to be able to come together to create meaningful actions and insights for the market. And AML is another huge example, Anthony, that we're seeing in terms of not just sort of the capability in that process, but imagine, you know, a utility play where it's not just, you know, your interaction with that particular fintech or partner, it's your interaction with the broader ecosystem, perhaps multi-bank, multi-party, really being able to leverage sort of an open ecosystem for the, you know, good of the entire financial services market. So we think that this concept, and, you know, with our launch of our product, really, you know, backs the importance of this being a critical differentiator.
And Tracy, and on that point of just managing the sort of the organizational change, you know, Anthony talked about the importance of, and you also talked about the importance of having the right business strategy, right? And bringing people along across different parts of the organization. How do you see some of your clients sort of managing that level of change?
Yeah, we are very collaborative. So for the most part, like HR, you know, org change, we are typically one party at the table. We have a strong partner network, and we typically will work with our customers, partners, work with partners that have expertise in that space. And it really does take a village in terms of understanding what the business requirements are of that business user, and then linking it back to the technology enablement, and then impacting the change. It takes a village. It's not something that, you know, I would say do on our own, and even when we did it for ourselves, there were a lot of third parties that we engaged to help us along with that journey as well.
That's great, Tracy. Thank you. So I know we'll have to turn to questions from the audience in about 5 minutes or so. And so perhaps maybe you could each provide just some of your closing thoughts on you know, why you think payments as a managed service is critical for financial services today, and maybe you know, just a quick benefit summary, you know, for folks in the audience. You know, I'll start with Tracy, please.
Sure. So I think throughout this week of the sessions, you know, we know this, but payments revenue is extremely important to the financial services industry, and it's a growth industry. And what's changing in terms of the market, so competition, customers, product, lowering barriers, what's changing is the pie is growing, but the share of the pie is changing. It's changing globally, it's changing nationally, it's changing in terms of mix. And so when I look at my panelists here and the different personas we have, if you're a product innovator like Intellect, it's going to be incredibly important for you to have these types of solutions to increase your share of that pie. And same goes for challenger banks, digital banks, or the large incumbents. If you're not looking at these modern, taking advantage of the modern technologies or modern business models, you're really going to have a really small share of that pie moving forward.
Thanks, Tracy. Dave, your thoughts in terms of just payments as a managed service and financial services today, and just the benefits?
When you think about banking, like banking fundamentally is all about payments. Like it's all about the evolution of payments, and payments in Canada in particular is evolving right now at an absolutely furious pace. So when I think about that, I think again, payments as a managed service is one of those things that the time has come for it, for all the reasons that we talked about earlier in the session. It's happened in other parts of the business over the years. As we said at the start of this session, the idea of buying application services versus building is not new. It's been happening. It's been accelerating for a long time. And now we finally got to the stage that we're actually able to do it in payments. And the other things that are happening to drive change in the country are just really, emphasizing the value of this going forward. So I guess my summary points are, I think it's an idea whose time has come. The technology is ready for it. The market demands that are out there that are driving it, and the need to be flexible and to grow and to connect in the future are another things that are really driving the need for this type of a modern service. We talked about open banking, a modern service, connectivity, preparation for open banking. It's really something that the time has come for it.
Thanks, Dave. And Anthony, your thoughts, please.
Sure. So I think for banks that are willing to make a strategic investment in transitioning their payments model from self-managed infrastructure to payments as a managed service, there are absolutely measurable benefits across all aspects of their payment operations, right? So, yes, we need to deliver against the client demand, right, which we've talked about around monetization and differentiation. But I think it's also important to think about the operation as well, right? And that's one area that we normally don't talk about, and where we do see some significant savings and some significant benefits, right? So with those increased efficiencies in IT spending, we're also going to see improved straight-through processing rates, a reduction in manual repair and reconciliation efforts, shortened time to compliance, improved performance, scalability, and future-proofing as well, which is very big for me, because I don't think that I could do this again in my career after doing it for 20 years. I want to make sure that I'm putting something in place that whoever succeeds me, it's still going to be fit for purpose for them by the time I retire. So I think, we've talked about a lot of these benefits, but I think, as you look at this, and we've talked about strategy as well, just ensure that whatever you're putting in place, is fit for purpose and is fit for the long term.
That's great, Anthony. Thank you. So I know we have about 10 minutes left in this session, and so there are a number of questions from the audience that I'm just going to run through and seek your responses on. So the first one is really around the internal groups within the bank, and traditionally compliance within a bank, the regulatory folks within a bank have perhaps had raised issues or concerns around moving core capabilities like payments onto the cloud. Are you seeing that posture? And maybe I'll start with Dave on this. Are you seeing sort of postures within some of those groups evolving over time?
Yeah, I think definitely that's evolved over time. There isn't a large organization on earth that isn't well down the path of a cloud strategy today, and the nature of the really big public cloud providers is just changed so dramatically in the last number of years in terms of safety, security, resilience. You really do have the ability, if you implement it properly, to have a more secure, more resilient platform than internally. And of course, that's a conversation you have with your internal partners in terms of risk and compliance. So I think the conversation has been evolving. I think that there's, banks are by nature cautious. So the approach of getting into this has been maybe a little slower than some other industries, but everybody is down this path. And I think that the internal partners of the bank recognize that. They've seen the results of many, many banks around the world that have gone down this path and have seen that it's actually a safe and secure solution. But the devil's in the details. You can take a great solution and you can do a crappy job of implementing it and you'll have a bad solution. And you could do that internally or externally. Just saying I'm going to cloud isn't a panacea to say it's going to be perfect. It's still all about execution, but I think that the raw capabilities underneath it are just dramatically better and have evolved a lot over the last number of years.
Thanks, Dave. Anthony, are you seeing that as well with the banks, the global bank you were with previously and at CWB, just in terms of internal stakeholder support?
Oh, yeah, absolutely, Syed. In fact, just even when I came to CWB and the size of our organization relative to where I was coming from, and I think at my previous organization, it just made sense, and it was, they're normally, they were normally, first adopters of this type of technology. But even at CWB, when we started having the conversations around the architecture to support the payment services hub, there was no question that it was going to be on the cloud, right? In fact, we were asked, do you want it on-prem or do you want it in the cloud? And it was one of the easiest answers associated with the design of the architecture so far. So I would say that it's kind of not even a question at this point now.
Okay, that's great, Anthony. So Tracy, there's a specific question that that came in for you. The question is really around the risk piece, right? And is there really this difference between kind of the perception around the risk associated with cloud versus the reality of the security? I mean, I think some may argue that cloud providers actually come with higher real security than on-prem. What are your thoughts on that?
Well, first, not all cloud providers are created equal. So
that's true. Yes. Very true. Yeah.
But when you look at the amount of investment and signals that my company, I don't know what I'm joking a bit. I don't genuinely have the comparison of the exact numbers, but when you look at the investment and the amount of infrastructure that we have globally and our position on security, from a technology perspective, the technology absolutely offers a secure environment, and maybe it's going to be more credible hearing it again. David said it earlier. Coming from that position of a CIO in a global bank, like the technology offers a more secure solution. However, it's not just the technology, it's the operations, it's the process, it's the management that also has to complement that technology in order to create that really secure environment. So there's a education, there's a skilling, there's a maturity that has to go along with it. But from a technical standpoint, from cloud security perspective, I would feel very confident saying that is absolutely a more secure choice. And even going back to some of the comments around your segment of business, for smaller financial institutions that don't have that same level of expertise or skilling, a managed service in particular can offer a huge increase in security and risk management as well. So,
Syed, if I could add one other point to that, a huge number of the things where people have had security incidents in the past as well has been where companies have not had their technology up to date. There's tech debt on old operating systems, things haven't been patched. So like a really key thing for me when we think about moving to the cloud is you're actually forced into the fact of you're going to be on a more modern release. It's going to be managed. You're going to be at the right patch levels. And it's being done by an organization that's doing that across thousands and thousands of companies. So like that's probably the biggest factor, again, when you think of what breaches have happened in the past, is that there's a door that's been left open in terms of something that is old, hasn't been patched, or has tech debt. And just eliminating that to some degree of being able to move to the cloud is actually like a huge step forward.
Oh, that's great, Dave. Thank you. Anthony, there's a question for you here that sort of recognizes that throughout the week, people have commented that payments has become very commoditized, right? And increasingly, some feel and might argue that the ability to differentiate is actually becoming less and less. Does moving to the cloud or adopting sort of payments as a managed service, in your view, increase or decrease the agility that you as a bank will have to respond to sort of client demands, client requests, and actually offer differentiation?
Yeah, I think good question. I think it's absolutely going to accelerate it, right? In fact, I would say if we weren't to make this move, we would not be in a position to differentiate ourselves, right? We would constantly be in that cycle of trying to keep up 2 years behind everybody else, right? Because without the right architecture in place, which includes the right partner and the right technology, right? Particularly, payments as a managed service, it's the ability to hook onto it, and this is what we're learning the deeper we get into the relationship and learn about the technology. The ability to hook onto that single platform, right, is so much easier than doing a one-off deployment and implementation with a third party, right? So we think that it's going to allow us to move very quickly to parity with the industry, right, to be competitive. But as I mentioned before, it's going to allow us to move very quickly to keep up. And I think if done right, even in some areas, particularly since we focus on a specific segment of the commercial industry, if we really do it right, then yes, we will win, right? And I think that having that payments as a service, payment services hub is going to be key to that. But another point that I would mention outside of, or somewhat tangential to this, is the user experience as well, right? So you can have a great front end user experience, but if it's not connected to something that supports that user experience on the front end, right? You're making an investment in, or maybe lipstick on a pig, right? You're making it look pretty on the front end, but it can still be very disjointed, which is visible to the client as well, right? So you need to look at it from the continuity of the front end to the back end. And I think having that payment services hub or payments as a managed service gets you to that place a lot faster.
Okay, super. Thank you, Anthony. So I know we have just a minute left, so I'm just going to ask the final question, sort of round robin here in sort of 30 seconds or so for each of you. The question is, should cost savings be sort of a specific criteria in your minds for moving to a managed service on the cloud? So if I could maybe start with Dave on that.
Well, having spent 25 years working with two of the major banks, I can not ever recall a time when cost savings has not been a factor. So absolutely, like cost savings are a factor, but it's not the only factor. Like cost savings are great, but cost savings, quality of execution. When you talk about what differentiates organizations, like quality of execution is a big deal. Quality of execution and time to market is a big deal. So if I think about a lower cost solution, something that allows me to be more agile to the market, and something that gives me the capability that I can build on to differentiate, that's the type of solutions we're looking for. I'll stop there.
Yeah, thanks, Dave. Actually, we are out of time. I just want to thank everyone for joining. Have a great rest of the conference for those of us who could join our panel. I appreciate your time.
Great. Thanks, everyone.